Hello and welcome to your V2U Research Daily Market Wrap for Thursday, May 7th, 2026. I'm your host, and today we've seen a significant shift in market sentiment. We're breaking down the numbers, the technicals, and the stories behind today's biggest movers on the Australian Securities Exchange. Stay tuned as we dive into what this means for your portfolio and the week ahead. The S&P ASX 200 index closed at 878.10 today, gaining a solid 84.5 points, or just under 1%. This gain extends the strong momentum we saw yesterday, reflecting a growing confidence among local investors. To put this in perspective, over the last 5 trading days, the index has climbed 2.45%, and we are now sitting just 3.5% shy of its 52-week high. It's a clear signal of strength in the face of global uncertainty and a potential turning point for the local market. What's driving this local surge? Much of it comes from Wall Street's record-closing highs on Wednesday. Global optimism is climbing following news of a potential agreement between the US and Iran to end the conflict in the Middle East. Markets are pricing in a stabilization of global energy markets and trade routes, which is providing a massive tailwind for risk-on assets like equities here in Australia. It's a global green wave, and the ASX is riding it. Now let's look at the technical architecture of this rally. Understanding these levels is critical for navigating volatility. The index continues to hold firmly above the key support zone near 8,383.2. This level has acted as a historical floor multiple times this year, and as long as we remain above it, the medium-term bullish case for the ASX 200 remains very strong. It gives traders a clear line in the sand for risk management and entry points. On the upside, all eyes are on the near-term resistance located around 9,200.9. This is the ceiling that the market has struggled to penetrate in the past. For bullish participants, a clean break above this 9,200 level would be a major technical victory, potentially opening the door for a fresh run toward all-time highs. If we see high volume on the break, it confirms the strength of the trend. It's the key level to watch for the remainder of the month. Let's talk about momentum. Our 14-day Relative Strength Index, or RSI, is currently reading approximately 57.47. For those new to technicals, the RSI measures the speed and change of price movements. A reading above 70 usually signals an overbought market, while below 30 is oversold. At 57, we are in a sweet spot, showing positive momentum, but without the immediate risk of exhaustion. There's still plenty of fuel in the tank for this rally before we hit that overextended territory. Despite the overall strength, investors are keeping a watchful eye on macro data. Gains were somewhat capped today as we await Australia's trade figures for March. Remember, February was a strong month with rising exports and falling imports. If the March data shows a continuation of this trend, it could provide further support for the Australian dollar and broader economic sentiment. In this market, data is king, and vigilance is the key word today. Inflation worries are still lingering in the background. The Reserve Bank has recently warned that higher fuel costs resulting from global conflicts could trigger second-round inflation effects. This is when temporary price shocks lead to broader wage and price increases across the economy. It's why the RBA remains hawkish and data-dependent, and it's a key reason why some sectors are still struggling to find their footing despite the broader index gains. Sector performance during today's session was quite mixed, despite the index's gain. In total, 7 of the 11 GICS sectors ended higher. This tells us that while the headline number looks great, the under-the-hood performance is more nuanced. Investors are being selective, rotating out of lagging areas and piling into sectors with the strongest growth prospects. It's a stock picker's market right now, and finding the right sector is half the battle. The materials sector was the undisputed standout performer today, surging an incredible 3.67%. If you look at the 5-day trend, it's up a staggering 7.53%. This is being driven by a rebound in commodity prices and a more optimistic outlook for global industrial demand. Our analysts at V2U Research have been flagging the materials sector as a key area of opportunity for those looking for leveraged exposure to the global recovery. When the big miners move, the whole market feels the impact. We also saw a steady hand in the A-rate and consumer staples sectors, which gained 0.68% and 0.66% respectively. In times of inflation uncertainty, these sectors are often seen as safe havens due to their ability to provide consistent yields and essential services. It's a classic defensive play that many institutional investors are currently using to balance their portfolios against more volatile growth stocks. Stability is a valuable commodity in today's environment. On the downside, energy was the worst performing sector today, correcting nearly 3%. This was followed by utilities, which fell 1.6%. These declines reflect the market's concern over volatile fuel prices and the potential for higher operating costs. For investors in these sectors, it's a reminder that global geopolitical shifts can have a very direct and immediate impact on your bottom line. Diversification across sectors remains the best defense against these sharp corrections. Among individual stocks, we saw some truly spectacular moves. IperionX Limited and Megaport Limited were the strongest performers, rising over 10% and 9% respectively. IperionX is benefiting from its strategic position in the critical titanium supply chain, especially with increased defense interest. Meanwhile, Megaport's cloud networking solutions continue to see massive adoption globally. These are high-conviction growth stories that we are tracking very closely at V2U Research for our premium subscribers. Conversely, it was a tough day for TABCORP Holdings and IMDEX Limited. TABCORP recorded a massive decline of over 23% following a disappointing earnings update and regulatory concerns. IMDEX fell more than 11% as drilling activity slowed in key regions. These sharp corrections serve as a stark reminder of the risks inherent in equities. This is why having access to professional, data-driven research and disciplined exit strategies is so important for protecting your capital. Navigating these markets requires more than just news, it requires an edge. At V2U Research, we provide that edge through our multidisciplinary approach. From our AU Daily Report for quick signals to our momentum model portfolios for deep trend following, we help you make sense of the noise. Our mission is to provide thorough, straight-to-the-point reporting that helps you maximize gains and mitigate risks in the Australian market and beyond. Join our community of savvy investors today. Looking ahead, the market is laser-focused on the upcoming US Initial Jobless Claims data. This will provide critical insights into the American labor market and the broader economic trend. Historically, these data points have caused significant ripples across the ASX, so make sure you're prepared. If you want to know how these global events will impact your specific ASX holdings, make sure you're subscribed to our premium alerts at v2uisearch.com. If you found this 8-minute deep dive useful, please hit that like button, subscribe to the channel, and turn on notifications so you never miss a market update. We want to hear from you. What ASX stocks are you tracking this week? Share your stock watch list in the comments below. For V2U Research, I'm your host, helping you invest with confidence. Thanks for watching, and we'll see you in the next wrap.
The information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.